Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Tony Seo, Head of Marketplace Regulatory Technology at Nasdaq, to discuss trends we can expect to see in surveillance for 2022. Tony, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me, Jill.
What do you see as the top surveillance trends that will be prevalent this year across the financial markets ecosystem and beyond?
Well, we're seeing a pretty interesting start to the year already, but I see three trends formulating. A rapid increase in crypto and digital asset trading. We're going to see through the year a continued rise in retail investment, and then kind of cloud-based surveillance is going to be a kind of big move through the year as well.
And let's start with a debrief of the rapid increase in crypto trading and how this has impacted surveillance teams globally.
Well, we've seen phenomenal growth in kind of the volume of crypto asset trading. The first half of last year, the IMF reported that there was the $2.5 trillion of kind of market capitalization of crypto through the first half of last year, right? And then through that, we're also seeing an increased pace of regulatory action, right, from last year and going into this year. And I think that's what's going to drive a lot more activity on the surveillance side. So to give you a few notable kind of examples, CVM Brazil, in March last year, approved 2 ETFs, one Bitcoin and kind of one composed of kind of 5 different cryptocurrencies. And both these are listed on the B3 stock exchange. The FCA has also encouraged registration of crypto exchanges, and they've already issued a few warnings for different crypto traders' activity. And then we see out in Asia, the Monetary Authority of Singapore has been kind of pushing forward with their licensing regime in crypto, right? So with this kind of increased activity on the regulatory side, we're kind of seeing 2 impacts. So firstly is that the crypto native firms, there's an increased kind of understanding that they need to do more and be more proactive from a surveillance and market monitoring and kind of like the protection and securing the fairness of their own internal ecosystem, right? So we've been working a lot with crypto natives to help get their internal systems in place. And then on top of that, more traditional kind of exchanges as well as trading firms, they're seeing more activity in the crypto space, right? So with these ETFs and such. So we're working with them to upgrade their systems to be able to kind of handle these types of products, right? So overall, we're seeing an increased activity in the space, which kind of brings in kind of more traditional players to be able to handle that type of product. And then also in terms of crypto natives, upgrading their platforms.
Another trend you identified as impacting the surveillance community is the rise of the retail investor. Tell us more about that.
So retail participation has doubled in the past 10 years. So this is kind of something that I think is fantastic. We're seeing much greater participation in the marketplace, right? And this has been enabled through quite a few things. A lot of it's been technology driven, as well as the COVID kind of pandemic has kind of driven a lot of this activity as well. But really what we're seeing is this retail wave is not going away. We're seeing it here to stay. And then from a surveillance perspective, it really kind of brings a few of its own novel challenges. I think the most interesting one is the impact of social media, right? So a lot of the new retail participants, they really interact with the marketplace in very different ways. And social media is a big facet of how these new participants interact with the market. So you see meme stocks, you see the social media influencers, right? And these are kind of I would say two aspects of investment that surveillance programs need to start taking into place. So from a Nasdaq perspective, we've started incorporating social media into our own surveillance program. And then from a technology perspective, we're starting to incorporate it in a kind of monitoring approach, right? So this is kind of definitely a very interesting space to watch. And I would say going to 22, this is going to kind of start impacting more and more surveillance teams.
And finally, Tony, Nasdaq recently announced with Amazon Web Services where we will partner together to move the Nasdaq markets to the cloud. What does that mean for surveillance?
This is kind of very exciting for us. We've been working with AWS, Amazon AWS for quite a few years now. So we have created a cloud-based surveillance approach, a cloud-based solution, which we've had out there. And I'll say for a few different reasons. Firstly, the benefits of technology itself, a greater comfort in its use, and then also, interestingly, kind of like a trend towards work from home, right, has really kind of helped promote that kind of push to this cloud-based approach. And kind of going into last year, I would say the majority of our new setups have been cloud-based, right, as opposed to kind of on-prem. So this is definitely a trend that is here to stay. And I would say just kind of generally going into 22, it's compared to 21, it's much clearer in terms of what the surveillance team is going to have to need to deal with, right? And this is kind of definitely a big difference between going to 22 compared to 21.
All right, Tony, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.